Hi there, welcome to kneppyinvests. An absolutely intriguing, fascinating day on the markets. You might be saying, what? The market hasn't risen all that much. In fact, the ASX 200 is only up 0.15%. We have about 30 minutes left in normal trading today. And in fact, I started this video 30 minutes later than I wanted to because of how fascinating today has been. Now, I'll go into the reasons why today has been a really intriguing day on the markets. Not only because of announcements that have been released in Australia, but something that happened overseas. A company released their results, their quarterly results in America, and that has been the talk of Twitter this morning and into the afternoon. And we had some very important data being released today in Australia, which did cause a little bit of a stir on the SGO at 11:30 a.m. So before we discuss all that, have a look at the announcements or the best announcements of the day and worst announcements of the day. I'll just go through the schedule. Now, to start off with, I do have a few administration things I want to talk about, which include the schedule and a few other things. Then we'll have a look at the ASX today, the best performing companies, worst performing companies, sectors, and indices. I'll have a discussion about Tesla, the company that did release their quarterly report, and a bit of a stir on the Twitter sphere today. And I'll discuss and explain why it's been the talk of the town. Also have a look at what caused a little bit of volatility in the XJO at about 11:30 a.m. And then we'll get into announcements. I had a plethora of announcements to choose from. I think the top four were quite obvious. So the top five announcements of the day are as follows. Kogan, Clean Space, Cleanaway, so two companies with clean in the name, Scali, and a company called SSH Group, a company that released their Appendix 4C today. I did have trouble finding or choosing between a massive amount of companies for that fifth spot. I went with a company I don't know much about, but when you just have a look at their cash flow and the markup of the company, it looks intriguing. I was going to choose EZZ Life Sciences, but because I do own that company, I wanted to include a company I don't own. And then I'll go through some of the other interesting announcements. So quite a few quarterly activities reports. So we're talking about Perseus, Linus, Beach Petroleum. I won't go through all these companies. And then quite a few Appendix 4Cs and 5Bs that were, I suppose, worthy enough to be included in the top five announcements of the day. And we're talking about Max 7, Western African, Develop Global, PointsBet and BlueBet had both firsts in terms of Appendix 4Cs for both companies. I'll talk about that in later in the video. Fineos, Wrkr, Vinyl Group, ABV, which I think is ABT, Brake Technology, Neuren Pharmaceuticals, and the company with the ticker code CG1, which is Carbonxt, if I remember correctly. Okay, so that's the schedule for today's video. So a few administration things to talk about. So tomorrow is a public holiday. So I have already decided that I'm going to be releasing two videos tomorrow. First video is on SciDev, their Appendix 4C, a very impressive Appendix 4C. And then I'll also release a financial year 2023 video on ReadyTech. Haven't done a video in that series for a few weeks. And I'm also thinking, because we are moving towards the end of April, of doing a video like the first, second, or third day of May, the top 5 or 10 quarter reports of the quarter. So that's Appendix 4Cs and 5Bs. I have been drawing up a list, and already that list is over 30. And that's on my quick judgment of the list of ticket codes I have written down beside me. Also, I'd like to mention comments. Don't forget, if I don't reply to your comments in this video, I will reply to that comment in Saturday's video, answers and replies, unless I completely forget and for some reason skip your comment, your question in that video. So if you do have a question for me, leave it in the comment section of this particular video. Okay, so that's administration things done for this video. Now, let's have a look at what happened on the ASX today. Still got about 24 minutes left in normal trading and then a 10-minute closing auction. The market has been up and then went down rapidly. You can actually see it right here. You can see it right here. The market went down rapidly at 11:30. I'll talk about that in a second, and then has stable off, but keeps going down a little bit, particularly the XTX. So I'll discuss why that has happened. So we'll say up slightly at this point in time. So let's have a look at the best performing sectors and indices, and pretty divergent group of performers here. So staples up, financials up a little bit, 0.44 and 0.42% respectively. Energy up slightly, healthcare up slightly, materials relatively flat, and discretionary IT, real estate, telecommunications, utilities, and industrials all down. I expected real estate to be down a little bit more than that. Gold has had a really good day. So yesterday had a bad day, today had a good day. That's one thing about gold. It can be quite volatile. Still remember watching Your Money, Your Call, which used to be on Sky News, whatever it's called, Sky Channel on Foxtel. And this was back in 2012 and 2013, and gold was mentioned every single day on that show because it was so volatile. Sometimes gold companies were up 8% one day, down 8% the next day. And it seems like we're back in that sort of scenario where gold can do really good one day and really bad the next day, and then really good the next day. So gold's had a good day. Banks has had a good day, up 0.5%. So let's have a look at the worst performing indices. I don't think we had to do that, or I had to do that. So industrials, utilities, both down 0.05%, all for utilities down 0.4%. Now let's have a look at the best and worst performing companies on the ASX today. And this did sway me to choosing the top 5 announcements of the day. You'll be able to see why in a second, particularly when you have a look at the top losers. So top gainers, nothing much here, although Carbonxt CG1 did release their Appendix 4C, and the share price is up 32.7%, but really low turnover. And I didn't really understand why the share price was up until I saw the turnover. So about 15, I think it was 12 or 15 trades in that company today. So I don't think the share price rallied or has rallied on the back of their Appendix 4C, because it didn't blow the lights out, to be honest with you. Other than that, I'm not seeing anything here, except Zuno has gone on another run. They released an interesting announcement yesterday. So let's have a look at the market cap, or by market cap. And here we have Taito, which is an interesting company. And I'm pretty sure I do have that company on my list of 5Bs, or maybe I don't. But that is an interesting company. We have PlaySide Studios there, which is good. Base Resources is up 10%. So that trade I made in that company 2 days ago seems good. Demerits is there, but none of these companies released an interesting announcement that I can remember. Alcidion's there. They released their Appendix 4C a few days ago. So nothing really really sprouting out there in the top gainers. But let's have a look at the top losers, and you'll be able to understand why quite a few of these companies are on this list, particularly the top 3. Okay, and there we are. Kogan, the worst performing company on the ASX today. Next Science is the second worst performing company, and the third worst performing company is not on my top 5, but we are able to see that company when we have a look at the list of companies by market cap. Otherwise, nothing out there is jumping up at me. There's Rectify Technologies down a little bit more today. So let's have a look by market cap. And there it is, Cleanaway down at 10.96%. Drone Shield is down as well, but share price is moving towards the capital raising price at 80 cents. So that's not a surprise as people sell down. I'm assuming that's what they're doing. They're selling down in anticipation of getting some shares in that capital raising and maybe taking profits. I don't know. Crisis Corporation down 11.7% the day after they released their Appendix 4C. That's actually interesting in itself. So if I do have a look at some charts later in the video, I might put down Crisis Corporation, but I think that could be a negative looking chart based off that share price movement. So maybe a delayed reaction from the market. So hopefully you'll be able to see or understand why Kogan, Cleanaway Waste, and Clean Space were the top 3 announcements of the day. Now on to Tesla. So Tesla released their quarterly earnings. Now, the market was expecting a really bad result from the company. We saw Tesla share price absolutely collapse over the last few trading days. In fact, here we have a look at their chart. Share price in a well-defined downtrend. Share price has collapsed, although share price was up 1.85% today. And this was all in anticipation of a bad quarter from the company. So the company did release their quarterly report. they did a conference call with Elon Musk. And the one really notable thing is in aftermarket trading or extended hours, share price of Tesla is up 15.4%. Yes, 15.4%. So it's going to be a good day for Tesla and shareholders on trading tonight. Now, this has caused a little bit of confusion out there among some tweeters or twitters. They don't understand how the results can be so bad, yet aftermarket trading is up. In fact, the company missed expectations. So a lot of these people saying and writing on Twitter or X, whatever you want to call it, this cannot be so. This is a fraud. This is the worst thing you've ever seen in your life. This is a screw over by to the retail market by greedy corporations, that sort of thing. Fortunately, we have enough sane people out there to let us all know and explain why the aftermarket hours for Tesla is up. And the best way to think about this, and this is the way I think about when it comes to releases of results, results are always backward looking. That is how the company has performed. What the market is looking at is expectations. It's all about expectations. The market is forward looking. So not only is it important to understand whether the company beat or missed expectations, it's also any forward looking the guidance the company has given. Now, I don't think, and I haven't gone through the conference call, and I don't think Elon Musk gave any guidance, but just based off what I've been reading on Twitter, there was a lot of bullishness within this conference call. So let's have a look at some of these tweets, and let's have a look at, okay, so Tesla reported 9% drop in revenue, biggest year-on-year decline since 2012, a 55% drop in net income, and gross margins of 17.4%, down from 29.1% 2 years ago. Meanwhile, the stock is up 13% in after-hours trading. In fact, it's up 15%. Expectations are everything in market. So it's not based off the past, it's based off the future. And I'm pretty sure he would have got a lot of replies saying, this is a fraud, this is ridiculous, this is all screwed over, retail investors are getting screwed over, that sort of thing. Another one from Invest Answers, Tesla is soaring in after-hours trading. Robo-taxis aren't just fantasy, they're becoming reality. So I haven't listened or read the conference call, so maybe it's just some of the things they mentioned they might be doing in the next few years that has caused some excitement. There we are. Missed earnings, but price up. Only Tesla. No, it's not only Tesla. It's other companies as well if they release any bullish guidance, which Tesla might have done. And there is Lily. Well, that's not Lily. Well, that's everyone. Lily on X. Oh, that's the wrong one. Sorry. I was looking at the completely wrong tab there. Okay. So Lily report, and I noticed a lot of these confused tweets out there. And this tweet from Lily, I have no idea who she is. CIO of Novi Lauren. Okay, so seems like she's someone pretty big. Anyway, people, you do realize when stocks go up on bad news, what that usually means, right? Yes. And then she actually wrote here, I have no position, but it's funny how people for some reason think good earnings means the stock should go up or bad earnings mean the stock should go down. It doesn't, and she should have gone a little bit further. It doesn't work like that. She also mentioned here, the market has already been pricing Tesla cratering. This may be the bottom for all we know. Okay. And I'm pretty sure a lot of people would absolutely disagree with her. But then I noticed as I went through the day, there were a lot of really interesting tweets about what has happening. So, for instance, this tweet, dude, Elon is absolutely crushing his core. Now, you might hate Elon Musk, but he can give really good conference calls or earnings calls. I don't think he's been this on point with his communication of very big picture ideas in a while. He did not come here to mess up today. He knows the street needed to hear real answers to hard questions. He's delivering. And that's what I've been reading here. It's all about the conference call and what he's been saying. And you can go through this tweet. I might actually go through this tweet after I've recorded this video, talking about the master list of all 29 major points discussed. So you can see it's not about the results. It's about the expectations and any sort of guidance the company has released. So that's all I'm going to talk about when it comes to Tesla. Share price has been in a bit of a funk, and this could be the end of the funk of Tesla. Now on to the next part of the schedule, and that is talking about the XJO. Okay, so let's have a look at the XJO, particularly around 11:30 a.m. What's happening there? Oops. It looks like they've completely changed this. Well, they have changed it. I don't want to search a watch list. I just want it. Okay, let's have a look at the XJO, and you already see this on all the markets. Now, you can't see this just by the daily chart because this is intraday. So let's have a look at the 1 minute chart. And there it is. There it is. So the market was actually up by about 0.5% before 11:30 a.m. And then right on 11:30 a.m., what happened? Here it is, right on 11:30 a.m. The XJO dropped 0.2% in 1 minute and then kept on dropping for the next 10 minutes. In fact, it went from being up 0.5% to being flat. What happened at 11:30 a.m.? Okay, so to know what happened at 11:30 a.m., sometimes I can talk a little bit quicker when I get excited. In fact, if you look just on what's trending in Australia, RIP Tesla, no idea what that means. Inflation. So that has just come up. Inflation. CPI has come in hotter than expected. That's all that matters. In fact, let's have a look and click on that. I'm pretty sure there's going to be quite a few tweets about CPI. Not that one, not him. The problem with Twitter is so many bots and so many crappy posts. So to get from the tweets you want to look at, you just have to go through so much crap. Inflation falls to 3.6%, but rents, education costs soar. So it's all about the wording and it's all about expectations. So inflation was higher than expected, and that's why we saw that little bit of a nosedive in the Australian markets. But rental inflation is now more than double standard inflation. Inflation is crippling Americans, blah, blah, blah. Maybe I should do just a CPI. CPI, probably get a lot of weird tweets. Oh, okay, here we go. Yeah, I like this. I think I'm going to like this tweet. While not untrue, so this is 9 News Australia. In some good news for the hip pocket, the latest numbers show inflation has fallen by 0.5% in the first 3 months of this year. But that's not exactly true. After CPI of 3.6%, it was 1% in the last quarter. I think it was 1%, or maybe it was a little bit more than 1%. So actually inflation or CPI has risen from the previous quarter, if I remember correctly. So there's a lot of interesting articles about this. There it is, March quarter CPI 1%, annual rate easing to 3.6%, but that was greater than expected. And that quarterly inflation has risen from the last quarter, so you can't discount that. So a lot of interesting news articles, just like that Channel 9, saying inflation falls. Well, it's looking like it might be a little bit more sticky. So the market is aware of that. And again, it's all about, and here we have one, an ugly CPI print. So it's all about how you read the numbers. So it does look ugly, but there's some news articles saying this is really good news for the Australian public. No. Yes, so that's why we saw a little bit of sell-off in the XJO at exactly 11:30 a.m. Okay, and now let's have a look at the announcements that were released today, starting with the top 5, and we'll start right at number 5, which is SSH Group. Well, I've got to log in first. SSH Group, a very small company. I think it has a market cap about $5 million. They released their Appendix 4C. So let's have a look at their Appendix 4C. And then also show you the graph, their receipts graph, which actually is pretty interesting. I don't know what this company does. I might have done a video on this company in the past because they are a recent IPO. So if you don't know what a company does, all you have to do is go to the About section right here. Here we go. Industrial company that has a portfolio of essential service businesses focused on service delivery to industries reliant on outsourced resourcing. No idea what that means, but industrial company. But let's have a look at why this company came in at number 5, among other reasons, apart from me not knowing what the company does, and they were operating cash flow positive. not only for the quarter, but also for the first 9 months of the year. So I came away from just looking at the section 1 of their Appendix 4C, I came away pretty intrigued about this company, particularly when I saw they had a markup cap of about $5 million or something like that. Maybe it was a little bit more. I can tell you right now. Let's have a look. What is SSH Group's market cap? 5.8 million. Yeah, I'm right. 5.8 million, which it rang somewhat warning signals, warning alarm bells in my head that there is something wrong when a company has a market cap of 5.8 million, yet they're operating cash flow positive, 2.261 million in the quarter and $4 million in the first 9 months of the year. So maybe capital expenditure. No, very little capital expenditure. In fact, from disposal or proceeds from disposal or capital expenditure, they actually increased the cash. So what's going on here? And I think the debt giveaway might be, if you do look at interest and other costs of finance paid, $610,000 in the quarter and $1.8 million for the first 9 months. So if we go to section 7, by the way, cash on hand is 2.6 million. So enterprise value so far is around about 3.3 million, which means they made more operating cash flow than the market or implied enterprise value, not including debt, So let's have a look at the debt for SSH Group. Section 7, this is where it becomes very important. Oh, okay, they have $32 million of debt. So the true valuation of this company is more like 37 million, not 5.8 million. Okay, I understand why now. And this is all their financing facility particulars, financier, NAB. So they have quite a few here. DeLarge Landon, Caterpillar Financial Services, Equipment Finance, Toyota Financial Services, Nissan Financial Services, Daimler Financial Services. They have quite a few financial services for equipment financing with car companies. Interest rates not that high. That's probably why the interest rates or the interest costs not that high. But they are paying down debt. That's the other thing I forgot to mention here. If you go to section 3, repayment of borrowings, about $1.6 million in this quarter and $4 million in the first 9 months. So that debt levels are coming down. Now let's have a look at the company's cash receipts history. Here it is. I've got it all prepared. Don't have to do it on the fly. So what was interesting about this quarterly cash receipts is receipts were dropping from 2000. So this company listed on the ASX in 2021. Receipts have dropped or did drop from about $30 million all the way down to $9 million last year. But we have seen signs that receipts are starting to grow again, up to $11.2 million in the most recent quarter, which is the highest receipts this company has received since the December quarter 2022. So possibly things are moving in the right direction, but don't get caught up by just looking at the market. Understand the company has debt. So that's the reason why I decided to include this company in the top 5 announcements of the day. Sorry, EZZ Life Sciences. Sorry, Develop Global. Sorry, Mac 7. Sorry, PointsBet, BlueBet, Fineos, Neuren Pharmaceuticals, ABV or ABT, Bright Technologies. Sorry, Perseus, Linus. Sorry, what else do we have here? EnviroSuite, Freelancer. Email Payments also released an update. I might have a look at that later in the video. Okay, so that's number 5 announcement, or the 5th best announcement. Maybe not the best announcement. That's probably not the best word. Well, coming in at number 5 in the top announcements of the day is SSH Group, a small company on the ASX. Coming in at number 4, we have Scali. You notice share price of Scali has not moved. In fact, there's been no trading in Scali. Indicative price or indicative? Is it indicative or indicative price? This company is doing a capital raising. I saw this company went into a trading halt at 8:55 a.m. and I went, what? Scali never goes into a trading halt. First thing I always think of when a company goes into trading halt is capital raising. But Scali has never done a capital raising in the past. The shares on issue for this company have been flat for the last 10 plus years. So if you open up the trading halt, some people are confused by this. There's 2 pages here. The first page is just from the ASX saying they're going to a trading halt. But there's always a second page. And I think some investors don't know that, because I have heard some people say, what's the trading halt about? We don't know. Go to the second page. And here it is. Capital raising. And I was like, what? Capital raising? Scali never does a capital raising. Is this a sign something bad is happening with the company? No. they're doing an acquisition. They are moving overseas. They're expanding geographically. This sometimes does scare me when a company decides to expand overseas. But on first look, it's not a very big capital raising, which also surprises me. There is a possibility they could have handled this acquisition just with a little bit of debt, because it's like a $50 million capital raising, if I remember correctly. Not much. $46 million. So acquisition and additional investment will be funded by a $46 million underwritten institutional placement. Oh, it is $50 million, and a $4 million conditional placement to an entity associated with Anthony Scali. Eligible existing shareholders will be offered the ability to participate in a non-unwritten SPP to raise up to $10 million. So it seems like it's a $60 million capital raising. Is there a share price here? I haven't even looked at the share price. 382. That's not right, because the share price is much higher than that. Talking about the Fab Furniture, what they're acquiring, $13.25, which is not much of a discount, a 5.8% discount, which I suppose is enough incentive to maybe incentivize, I've used that incentive word twice, to incentivize some institutions and retail investors to take part in this capital raising. But really intriguing that Nick Scali is doing a capital raising. I don't remember this company ever doing capital raising in the past. This could be the first one for a long, long time, if maybe ever, for this company. Will I partake or participate in the capital raising? I don't know. It depends on where the share price drops. Sort of like Drone Shield. If the share price of Drone Shield stayed above 90 cents, it's 84 cents, just above the capital raising price. If it stayed above 95 cents, I would have participated in the capital raising. But as the share price falls towards the capital raising price, less likely. And I still have about a week to decide, if I remember correctly, on a Drone Shield. But this video is not about Drone Shield. So Nick Scali coming in number 4 on the top 5 announcements of the day. Do you agree? I think it's just fascinating that a company I don't associate with doing capital raisings is doing a capital raising for an acquisition, and they're expanding overseas. And I do question, is this a good decision from a management? We'll have to wait and see if it does turn out that way or not turn out that way. Okay, coming in number 3, we have Cleanaway. You might think they released a negative announcement today. Share price down at 10.13%. Not quite. Okay. I did not know, but Cleanaway share price yesterday on the 23rd of April rose 15.8%. I completely missed that for some reason, not sure why. And now the share price is down 10%. So why? What's going on? So I also missed this response to ASX query. So obviously there was some media speculation yesterday, and more than likely it's about a takeover or proposed takeover bid. And it is, yes. So Cleanaway notes media speculation regarding a possible takeover offer by Seven Group Holdings, SGH. Now, the company confirms that it is not in any discussions with SGH in any relation, in any form of corporate transaction or otherwise, nor has it received an approach or offer from SGH. Then they also release a query. Not sure why, if it opens up. So I'm just not understanding, why is this not opening up? There we go. I sometimes get frustrated very easily. You might have noticed that. So it seems like the ASX wants to know what's been happening. I thought it was quite clear. It was just media speculation. So they should answer this in 3. Here we go. Yeah, 3. So the ASX is wanting to know why the share price rose a fair bit yesterday. I'm assuming that's what they're asking. And Cleanaway just says, yeah, there was media speculation yesterday. So that's all the answers. So Cleanaway. And let's have a look at the chart. I didn't have a look at the chart for Nick Scali. Probably didn't have to. I didn't have a look at this chart for SSH either, did I? Well, it's too late now. So let's have a look at the chart for Cleanaway. I'll have a look at the chart for SSH when I go through some charts at the end of the video, including Crisis. So Crisis and SSH. So this is the 1-minute chart. We don't want to look at that. Let's have a look at the daily chart for. Oh, you can see that massive spike in share price yesterday on that media speculation. And sorry, whoever bought at $3 yesterday, you just lost a little bit of money. Share price back down to where it was. And look at the chart. Share price is going sideways. This is sort of, you sort of going to understand why I'm not following this company at all right now, because share price doing absolutely nothing. no trend up or down with Cleanaway. And maybe if you look at the weekly chart, maybe there's something there. No, share price going sideways for almost 2 years. Nice uptrend from 2016 through to 2022. That's actually pretty nice uptrend. But share price consolidating now. And I have a feeling this company is not that cheap. Price earnings ratio, 144. Okay. Maybe not that expensive. But yeah, anyway. Okay, so that's coming in number 3 is Cleanaway because of media speculation. Share price has been quite volatile the last 2 days. Otherwise, share price absolutely doing nothing the last 2 years. Now coming in at number 2, we have Clean Space. Clean Space Holdings. Clean Space. I thought Clean Space Holdings was down a lot today. Didn't I see Clean Space Holdings in the... have I got the companies mixed up here? I might have the companies mixed up. Top losers? No, Next Science. Sorry, Clean Space. Next Science. I have the companies completely mixed up. Why did that happen? Sorry, Clean Space, and sorry, Clean Space owners. Next Science is a company that fell a fair bit today. Woo! I was wondering what the hell is happening there. Next Science. Now I understand. This company released their Appendix 4C today. Share price down 23.8%. Okay. And when I had a look at this Appendix 4C, I went, I am following this company a little bit, and this quarter report did absolutely nothing for me. A few reasons behind that. Now, their quarterly receipts are growing, but, so let's have a look at the quarterly cash flow report. So receipts are growing up to $5.4 million in the quarter, but the company is spending a lot of money. Now, first thing I really noted here is receipts for customers $5.4 million, yet staff cost is $5.1 million. So they're very barely covering staff costs. That's not taking into consideration product manufacturing and operating costs, sales-related expenses, admin costs, barely covering staff costs. So in my opinion, they just have hired too many people at this point in time. So the company was operating cash flow negative, not positive, negative by $3.7 million. Now, cash on hand is down to $4.97 million, and more than likely, they're going to have to do a capital raising soonish. I'd say within the next quarter, because that cash on hand is falling quite low. It's fallen from 9.2 million to just below 5 million. And maybe that's one of the reasons why the market has sold off. Don't have any debt. Now, here's a little bit of a concerning thing for me. I did go through, here it is, this one right here. Did go through their, their commentary. And this is looking at their product sales, cash receipts, and net operating cash flow. And this does tell of a really interesting, intriguing story. So product sales and cash receipts have been increasing through time. But if you look at the net operating cash flow, it is not only flat, it has been getting worse over the past 2 years. So this company has been increasing their receipts, their revenue, but they've been increasing their spending at a greater rate than the cash receipts and revenue. That's not what I want to see in a company. This company has to show me they have hit an inflection point. They have to show me they have reached some scale in their business and some, what's the other word? Some scale, some leverage in their operations. And they're not showing that. In fact, in terms of operating cash flow, the worst 4 operating cash flow quarters have been in the last 5 quarters. So I need to see this company getting to that point, showing some scale where they can increase their cash receipts and the revenue at a greater rate than they're spending. They're not there yet. And I have a feeling that's why the company share price has been sold off. So Next Science, remember, again, Next Science has been, if you look at the daily chart, has been showing some signs of breaking out. And I did read a comment. So they released 4 announcements within a week. Publication of study, preliminary results of experience study, publication of a study. And someone did mention, probably on Twitter, why have they released these 4 price-sensitive study announcements in a week? What's going on? And that person's conclusion was a capital raising. I think they knew this particular Appendix 4C would not be liked by the market, and they were just trying to put in some love for the company. So if you have a look at the chart, the share price was trying to break out on the back of those 4 study reports, and the market has said no today. Not today. No. Sorry, Next Science. We don't like this quarter report, and we are selling off. 23.8% down. Not quite as low as the share price was back in October. Share price got as low as 17.5 cents, so almost half from where it is now. And the market cap of this company is still 124 million. Well, maybe not today. In fact, today, the markup should be below 100 million. Yeah, it's at 93 million. So even though the market cap is now below $100 million, potentially looking cheap compared to what has been in the past, I have no desire to even think about taking position in this company because they need to prove me they have a business that can scale out and can show me some operating leverage. So that comes in at number 2 in the top announcements of the day. Coming in number 1 is no shock. It's Kogan. Share price down. The worst performing company on the day. Worst performing company in the ASX today. Down 26.5%. We're in the closing auction, so indicated price is now down even further than that. The low of the day was $5.05, so there is a chance the share price will close near or at the low of the day. That is the definition of a bearish day. Share price opened at $5.90. The high of the day was $5.90, so if you wanted to get out of Kogan today, it was on open. And they released a business update. That's all you need to know. Now, I had a look at this business update, and I was like, no, whatever. So I was a little bit surprised about the market reaction, to be honest with you. Now, to be honest with you again, I didn't go through this with a fine comb. So obviously there is something in this that the market didn't like. I don't know what that is, but there's definitely something in here the market didn't like. Maybe it's in this table. So we see a lot of negative movements in gross sales. In fact, quite a few negative movements. Although Kogan Mobile New Zealand is up 78%. Kogan First up 26%. Kogan Marketplace down 17%. Kogan Money down 52.4%. Kogan Insurance up 132.7%. So Kogan Insurance is doing well. Gross profit up. Adjusted EBITDA up. Adjusted EBIT up. So there is something in this the market didn't like. Maybe the market expected some better performance from the company. So anyway, let's have a look at the chart for Kogan. And Kogan's chart was looking really good, and then it started to go down, and now it's just fallen off a cliff, and it's moved back down to where it was before that run-up in share price back in January and February, down to $5.10. If it fell below $4.20, which has a fair bit to go right now, that will be a very bearish move and pretty big volume coming in today. I'd say the highest volume day we have seen since this big up day we saw back on the 28th of July 2022, and that was, I think, the end in the downtrend for this company. A really nice announcement, wherever that was the end in the downtrend, and that's confirmed it. Share price did not get any lower than what the share price was just before that announcement. In fact, it's gone higher. Anyway, so that's Kogan. The number 1 announcement of the day, share price down 26%. I was trying to see, or I was hoping we could get to the closing auction. Indicated price, $5.09. Okay. So there were a plethora of other announcements I have not got to in today's video. So quarterly activity report. So these companies released their quarterly activity report. Perseus. I'm sure most of these companies had a pretty good day because they're gold companies. So Perseus, Red 5, Silver Lake Resources. I'm just going to have a look at Silver Lake because I actually did like their report, up 3.3%. Regis Resources, I thought this was a little bit weaker than I anticipated. There you go. It shows you sometimes you have no idea, or I have no idea. Linus, I thought this was a pretty weak report, down 0.47%. I'll just open up Linus and I'll just show you what I mean. So the interesting thing about Linus is they actually did include a cash flow piece. I'm trying to remember where it was. Maybe it's a little bit further down. Here it is, yeah, cash flow. I don't know if Linus always does this, but most companies don't do this sort of cash flow table. And for the quarter, Recensi customers 107.7 million, payment for production 96.3 million, payments for capital expenditure, exploration, development 97.7. So this company burned through a lot of cash in the quarter. In fact, year to date, they have burned through a lot of cash. So I think that means there has been really bad pricing for rare earths. So just based off this, I sort of anticipated Probably a worse day from Linus, but the market might have expected that. Alkane, yeah, flat. I thought that was weak. Champion, no idea what Champion or how Champion has performed. Up a little bit. And Beach Petroleum also released the activities report. Up a little bit as well. Now, I'll get to the pennies 4Cs and 5Bs in a second. We also saw Articor released a update, up 2.17%. I'm pretty sure this is Redbubble who changed their name. So it looks like their trading update was not that bad, not like Kogan, which is interesting because they're sort of in the same space. PPT, Perpetual, released an update as well, down 3.5%. So obviously, Perpetual and their update were not fancied by the market. So let's have a look at the chart for Perpetual. And really nothing much happening with Perpetual's chart at all. Yeah, share price down a little bit today, so the market didn't like that. What else did we see? Envirosuite released a bit of an update, but I don't follow this company too closely just yet. I'm just waiting for a sales update, which tells me, or some sort of financial report from this company that tells me they're profitable or cash flow positive. Yet to see that, and the chart for this company is absolutely ugly. It's been ugly for a long time, but I'm still waiting, still following this company. Not that closely, but yeah, the chart looks absolutely horrible for Envirosuite. We also saw Freelancer. This looked pretty bad on the surface. Yeah, I think the market just doesn't like this company anymore. So first quarter business update, a lot of negative numbers in that. And EML Payments, share price on open was pretty high and it fell. So there you go. Share price open at $1.13, went to a high of $1.20 and fell all the way back down, which is a fairly weak movement during the day. Share price almost closed at the low of the day. And let's have a look at Kogan. Did it close at the low of the day? No, $5.10. So email payments released an okay announcement. PFS UK, new customer restriction lifted. And let's have a look at the chart for email payments, just because we're there. And this is a fairly bearish one-day candlestick. Yeah, that's a fairly bearish one-day candlestick. Not sure why there was a lot of selling. And possibly why there was a lot of selling is if you just draw a line right there. So quite a few shareholders bought between $1.07 and $1.24 over the past 6 or so months. And they probably had saw the opportunity to get out today. I'm still trading email payments right now. And I thought maybe today would be a good day and the share price would maybe break out above $1.24, or maybe not today, but in the next few days. Okay, so let's talk about, apart from the charts, the last thing in today's video and some appendix 4Cs. Okay, very close to including Mac 7. And hopefully the share price has gone up. Yeah, 5.7%. A nice appendix 4C from this company. Operating cash flow positive. Exactly what I want to see from a company at this point. But the cash flow from this company can be quite volatile through time. So $8.8 million in cash receipts and operating cash flow positive by $1.4 million. But it was a good quarter. But I want to see from this company this sort of quarter continuing in the next few quarters. So let's have a look at the chart for Mac 7. And yeah, share price going sideways. Look at that. Just going sideways. So this could have been a breakout if we didn't see share price down the last few trading days. So very close to being a breakout, but again, share price just going sideways. Now, WAF and Collidus both released their Appendix 5B with cash flow reports, and they both, well, Collidus wasn't good. So yeah, share price up 8.33%. But if you look at Collidus, and one of the things I look, and I think the market cap of this company is like $90 million, so it's not a very big market cap. But this company is in production. But as soon as I saw the all-in sustaining costs, $3,000.11 an ounce, I went, nah. And you can understand why this company was highly operating cash flow negative. So receipts to customers $40.6 million, yet operating cash flow negative $6.6 million. They are burning through a lot of cash at this point in time, which is a little bit different from West African. So West African, even though it was up a little bit, if you have a look at the activity report, company was operating cash flow positive. I'm pretty sure it was. If you have a look at the activity report, And the thing I want to focus on is all-in sustaining costs. So West African Resources have their operations or their project in Burkina Faso, and you would think costs would be much lower in that area. And here it is, all-in sustaining costs of $1,291 an ounce. That's US dollars. Was Clytus in US or Australian? I can't remember. I wish they would all report in the same currency. Yeah, that's in Australian dollars. Yeah, that's in Australian dollars. So you do have to do some sort of currency exchange, not exchange, but calculations there. But West African Resources spend less money getting the gold out of the ground than Colitis. So all-in sustaining costs is something I always look at for gold companies. In fact, all companies. So that's two other companies that released their Appendix 5B that could have made it onto the list of top 5 companies of the day. Develop Global down today, which is interesting. And this company was operating cash flow positive for the first time. $51 million in receipts, operating cash flow positive by $14.5 million. And I'm pretty sure I did one of these charts or graphs, whatever you want to call it. What do you call it? Charts or graphs? Yeah, here we are. And it's a brilliant history for Developed Global. There was a little bit of weakness in the last quarter, but receipts going up pretty consistently apart from the last quarter and up to 51.4 million. So what seemed like a really good quarter, the market just went, oh, whatever. So that's another company that could have made it onto my top 5 announcements of the day. PointsBet, I won't go into these two. PointsBet, I'll be surprised if the share price is not up. Yep, 6.33% for PointsBet and BlueBet. Surprised the share price is not up, 9%. And why am I not surprised the share price of both these companies is up or not up? Yeah. Why am I not surprised the share price of both these companies is up? Because both companies reported their very first positive operating cash flow quarter. Yes, both companies have potentially hit that important inflection point of becoming operating cash flow positive, maybe even free cash flow positive. So congratulations to both BlueBet and PointsBet. So let's have a look at the chart for both companies. PointsBet, flat. They are also doing capital, what do you call it? A capital give back? What do they call it? Capital something or other. Capital return, that's it. Details of a second capital return. I don't like that, to be honest with you. And there's reasons behind it. And BlueBet, hopefully the chart looks pretty good. No, both look very similar. Share price just consolidating. Very similar to that other company, which was Max 7. And funny enough, BetMakers chart looks absolutely stunning. Well, it did yesterday, but maybe not today. Now, chart looks pretty good. It's looking like it wants to break out, doesn't it? So BetMakers is starting to look a little bit better than the other two companies, but a little bit different companies. This BetMakers is not about gambling. I think they produce software or stuff for gambling places, BetMakers places, something like that. Anyway, Fineos had a really good quarter in terms of operating cash flow, but this company is seasonal, and the best quarter typically is the March quarter. And share price is up a little bit, but thankfully the market has not overreacted to this particular quarter because this company's cash receipts are seasonal, and typically this is the month. Yeah, and again, just like many other companies, chart looks unexciting to me. And then we have a company called, actually, I won't talk about Vinyl Group because they were not operating cash flow positive. It was just a nice increase in cash receipts for that company, but only up to about 1.5 million or so. EZZ Life Sciences. Definitely want to talk about this company. Share price down, has been or was up. Now, and this is another company that could have made it into my top 5, but the company had a really good cash receipts. I do want to discuss this a little bit more. And maybe I'll discuss this a little bit more in a standalone video. So receipts up to 24 million, operating cash flow positive 2 million. But the main number I want to show you is advertising and marketing. $13.6 million in advertising and marketing. And I can almost guarantee you there will be some shareholders complaining about that. Why are you spending so much money on advertising and marketing? And the reason they're doing that is because they can. This company has pretty big or high gross margins. So product manufacturing operating costs, only 6.3 million. And the company's management have decided we could take that gross profit, spend a fair bit of money in advertising and marketing to grow the company. And it's working. So I don't mind the spending that amount of money in advertising and marketing because it seems to be working, because this was a pretty good quarter from the company. Now, if they didn't spend as much money in advertising and marketing, maybe they would be a little bit more operating cash flow, but maybe and probably receipts of customers and revenue will be significantly lower than they were. So don't be too concerned with that advertising and marketing, because it is a cost that management can control. Fairly similar to satire. If you remember a few years ago, one of the complaints about satire was their high advertising and marketing. I remember one quarter, share price got sold off because of that. There's a reason they could do that, because again, high gross profits and gross margins. In fact, gross margins, not gross profit. All right. So I'll probably do a standalone video on EZZ Life Sciences just because I'm biased. Neuren Pharmaceuticals released another quarterly report, operating cash flow positive by a fair big amount. Not surprised the share price is down. And it's not a surprise, but there's nothing to complain about, in my opinion. Although I haven't gone through this with closely, but receipts 13.4 million, operating cash flow positive $8 million. And I presume cash on hand is now up to $243 million. Yes, cash on hand, $243 million for Neuren Pharmaceuticals. And finally, actually got two more to go here. The top performing company in terms of Appendix 4Cs was Carbonxt. I had a look at it and went, okay, I don't understand why the market's getting excited about this company. So cash receipts 3.5 million, not significantly higher than any other quarter. Operating cash flow positive or negative by 566,000. And then I just had a look at the trading, and not many trades. So not the trade history, summary. So only 13 trades today. In fact, yeah, not many trades today. So fairly liquidly traded, and that's probably why the share price is up. There was just a little bit too much exuberance by the few buyers. Share price is up, and I'd say there's a good chance share price tomorrow might be down 20%, maybe. And finally, Wrkr, W-R-K. I think I've done a video on this company. Share price down, and their Appendix 4C was intriguing enough for me to maybe pay a little bit more attention to this company. And I'll tell you soon, as soon as this stupid Appendix 4C opens via ComSec. So, receipts from customers, 2.8 million. Operating cash flow positive, 465,000. No government grants and tax incentives. No income taxes paid that were positive. Sometimes companies include positive income taxes paid, which is not paid. They also paid a little bit of interest. So the company does have a little bit of debt, but not much, too much, $3.3 million. I think that's serviceable. So just based off the very fact this company was operating cash flow positive, I'm going to have a closer look. The other thing I want to pay attention to is, for a company like this, is the question around whether or not cash receipts are increasing through time. And they are. Here it is. So the last, say, 2 years, 1.1 million, 1.5 million, 1.3, 1.7, 1.6, 1.9, 1.9, 1.9, 2.8. It was just a little bit of an increase in this last quarter that has me interested in this company moving forward. Moving forward, not right now, but moving forward. And the last thing we probably should look at is the chart for Wrkr. Is the chart looking interesting? No, doesn't look bad. Not that bad. Markup cap of the company is 39 million. Yeah. In fact, it looks better than I thought it was going to look. Let's have a look at the weekly chart. Has the share price fallen since it listed? Yeah, it has fallen, but share price sort of going sideways the last few years. Okay, so let's have a look at some charts. I forgot to show you some other charts here. EZZ. I even forgot to tell you about ABT break. That company was operating. Yeah, ADV braking technology. That company was operating cash flow positive again, but receipts flat. Receipts don't really, or they've been growing very slowly over time, but they're still operating cash flow positive. So sorry, ABV braking technology, for not showing you. And let's have a look at the chart for that company, ABB, Advanced Braking Technology. In fact, the chart for this company is in sort of an uptrend. There you go. And EZZ Life Sciences, chart for this company, share price has really broken out the last month or so. So even though share price is down today, it's just some people taking profits. That's what I think anyway, because that's a beautiful, well, not a beautiful looking chart. If we didn't have this dip and the share price was just slowly going up and then took off here, that would be a better looking chart. And the last two charts I want to show you are Crisis Corporation and SSH Global. And then this video is done. And this is an ugly looking chart. So share price of SSH Group has fallen significantly. In fact, in the last month or so, or actually 2 months, illiquidly traded, share price has dropped from about 18 cents down to 8.8. So an ugly looking chart for SSH Group. And finally, Crisis. This company was on my watch list. I have traded this company in the past. Share price going sideways after the uptrend had come to an end, and I was just waiting for a breakout. I was hoping the breakout would be to the upside, but looks like today, after they released their Appendix 4C yesterday, the market has panicked. I won't say panicked, but maybe some fund managers did the numbers and went, I think we might have to sell out of this company. Higher volume than yesterday, and the share price now at 9-month low at $5.75, down 12.2%. Okay, so that's all I've got for this video today. In the next hour or so, I will go through some of the other charts, although tomorrow is a public holiday, so I don't have to do that sort of thing, what I usually do at the end of the training day. And look out for my 2 videos that I hopefully will release on Anzac Day. So Side Dev and Ready Tech. So if you have any questions, any thoughts, leave them in this video, the comment section in this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.